Hey everybody. Good morning. Good morning, morning. It's the most bullish time of the year. Larry Goose, Andrew, Brian, Philip, Gary, John, TT, Arturo, Mary, JB, Mary. Good morning, everybody. David. So, if you didn't know, there is $97 trillion of debt. What the fudge? Anyway, check this out right here. World of debt, $97 trillion. This is how you visualize it. Let's see if we can either make it bigger or little. Uh, that's pretty wild right there. The United States has the largest chunk, 33.2 trillion of public debt. But I mean, is the world in a debt bubble? No, the colors are representative of the debt versus GDP. The United States coming in here a little bit green, so we're actually crossing the 100% mark. Japan at 255%, like way up here. And you can see there's some debt all over the world. The percentages here represent the percent of the worldwide debt, the percent of that $97 trillion. You may be like, well, how much is it right here? So the United States, 33.2 trillion. China, and that's growing like trillion a month almost. China, 14.6. Japan, 10.7. That's a lot of trillions of dollars, if you ask me. And right here, you got your debt to GDP percentages, 123 for the United States, 255 for Japan. It's like, where are the risks? Are we going to, is the United States, it's like the United States is going down the path of Japan, but are we going to be able to sustain that and stay solvent? Are we going to get crushed? I mean, let's be honest about this. Do you trust the government with the credit card? I mean, I think they're going to F it up. So I think they'll mess it up. And look at that Sudan, 256%. Should be coming in higher than Japan. Morning, everybody. Kimberly's here. I see that. Jan, Darren, Donald, Cliff, Ben. If you want to chat with me like all those fine folks right there saying, hey, if you want to get on the live stream, be able to chat, Rongamer, Muku, Jeff, Merle, click the button right over here, right down here, the little subscribe button. Be a subscriber. Click the subscribe button. Click the like button if I say anything today that is helpful, informative, information. Interact with the video, and get on the live stream, chat. Click the notifications button and get notified when I go live every single day and talk about stuff like this. So here we go. This is a long list of countries. Some of them have very little public debt, and like some of these countries that like Mako SAR, Tuvalu. It sounds almost like a drug, right? You hear that on the Truvelia, whatever. Kiribati. Honestly, never heard of some of these countries down here in the bottom, but hey, they're countries. It's kind of like John Oliver had. He was voting for the bird of the century, and he was pushing it on his show on HBO, and there were like 250, I think it's 258 countries were represented in the vote, but there's only like 256 countries in the official United Nations list of countries. So 2 extra countries in there, I guess. So a little bit funny. All right. Anyway, there you go. There's the public debt. The leaders up here. We all kind of know US, China, Japan, UK, France, Italy, India, Germany, Canada, Brazil, Spain, Mexico. Those are kind of rounding out the, I guess, stop at Spain. That rounds out the ones that have more than $1 trillion in debt. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 countries. So the top 11 all have more than $1 trillion. Now, what is the risk here? Well, if the world believes we can just run on debt, which arguably borrowing $97 trillion seems that we think we can just borrow our way out of into growth and out of things, eventually the bill comes due. So is the bill going to be soon? Is the bill going to be later? Not sure, but this is a problem sitting out here. $97 trillion. That's a lot of money. And we're not even counting the unfunded liabilities sitting in the United States, which adds another like $60 trillion to the U.S.'s debt. So something's going to happen eventually. What that is, I'm not sure. Not sure at the moment. Anyway, yeah, and Thrifty Nifty, glad to hear you nailed a good trade. Merry Christmas. All right, so moving on. And that's a leftover chart from last night. Let's refresh, reload, refresh. Where are we at with the S&P? Seem to keep grinding higher here. Grinding. Are we going to hit that all-time high? Or are we going to get a pullback before we do it? That is the big question at the moment. We sat right at the breakout level from July. We kind of sat there for a week and then popped. And very quickly got up to the 1272. Do we push it on up to that prior high here? And then what happens next? Let me put that at 48.18. A little closer. After we get through there, it becomes like, we're already kind of 70% likely we're going to go up here, 70%. So still leaves 30% that we may not see that price on this rally. That's the big weekly chart, the big weekly pullback that we did all of 22. We're busting up through. We've already gotten above the 618. It's the roadmap line pattern. The same pattern I talk about all over the place. Every chart. It's the orange line. Right there. Links in the description. So, there you go. We popped down, found support, turned up, broke it back above the 618, had a little trouble getting the momentum there. Now we're launching off. Once we get to the new all-time high, probably heading up to 52.58. Now, that's not to say we won't have some periods of pullback and epic bearishness. So please, please, please be aware when we crank the greed up in the extreme levels, we're probably going to get a pullback. This keeps edging up. If it gets up in the 90s, watch out. That's usually a matter of a day or two or three before we start unwinding this pretty quickly. The S5FI, this thing has cranked it up to 11 right here. We don't usually hang out above 80 for longer than about 15 trading days, about 3 weeks. That's coming up right there. It's kind of the wall. Are we going to hit the wall? We're getting really close. Now, could we stay up here longer than we've ever stayed up here before? We could. It's not very likely. Not very likely. We tend to pop up, especially if we get above 90, which at the close, 89.66. If we get a close above 90, watch out. That's extreme. That's 90. What is S5FI? That's basically the percentage of S&P 500 stocks above their 50-day moving average. When they're all above their 50-day moving average, we don't typically stay up here. So It's like the biggest market oscillator there is, and it's pretty darn accurate, as you can see. Go down, we come up, we go down, we come up, we go down, we come up, we go down, we come up. We're hanging out above the 80 level, which is an extreme. Usually results in a big down. Now, we're in the last few, we're on the back half of this last full week of trading. Next week is an abbreviated 4-day week, and then we're into 2024. Holy moly. Wow. So thank you for being with me this year in 2023 as we wrap up the last 7 days of trading. Today, tomorrow, Friday, and then 4 days next week. That's the last 7 days. So if you need to do any kind of tax selling, you need to do any kind of positioning, you need to figure out anything for your taxes, trading taxes for 2023. You got 7 trading days left to do it. Make sure you don't forget. And looking at the calendar, we've got, let me go ahead and refresh this just to make sure. We've got consumer confidence coming up at 10 a.m. Okay, grief, alerts, alerts, alerts. Market opens in 4 minutes. So consumer confidence coming up in about 34 minutes. I don't know. Is the consumer confident? Then we have existing home sales, and that actually ramped up in November. With the interest rates coming off just a little bit for mortgages, we actually saw, so I expect that to come in kind of hot, honestly. And then we have GDP numbers coming in before the market opens tomorrow. We'll talk about that tomorrow. Then we have core PCE coming in on Friday, 8:30 to wrap up the holiday week. And then we have consumer sentiment down here and new home sales. So we get existing home sales, then we get new home sales. And we'll be into the Christmas holiday. Now, next week, like I said, holiday week, abbreviated week. We are closed on Monday. I will not be live streaming. Just throwing that out there. Basically the world's closed for Christmas. Virtually everywhere is closed. And then Tuesday, the market is open. About half the world's still closed on Tuesday. Not a lot happening. Not a lot of numbers on Tuesday, Wednesday. Not much on Thursday. Some unemployment claims. Then we get Friday, still not much. So it's going to be window dressing and stuff like that happening that next week. Usually it tends to be a low volume, kind of a drifty type of week. But if anything crazy does happen, it tends to get a little extra crazy. So what is the roadmap line deal? Roadmap line, $5 is down in the description. It's called Market Roadmap. You get the Market Roadmap line, and I tell you how to use it. Now, this is available for free on the YouTube channel too. If you go to the live stream tab and you click on most popular live streams, I give you the code for free, so you don't have to buy it. But if you want a weekly watch list and you want an easy button to just click it and put it on the chart, or if you're using some other platform and you want to know what to do, it's like $5 for 3 months. Anyway, all right. Not here to sell you. If you want it, it's there. So roadmap line is what it is. Apparently, people hear me say it. Roadblock. I don't know. My mouth more to marbles. So there you go. It's the line that runs through the chart, and it doesn't mean much on S5FI, but it means everything. It means the world on a lot of these other charts. It's a support resistance line that gets respected quite often. And for the nerdier folks out there that know a little bit about Elliott wave theory, wave 2s and 4s on the correct time frame tend to bounce off of the roadmap line. And it works up and down. So that's an interesting little tidbit. And the market is just about open. Looks like we got it right there. Get a little pullback to open the day. Looks like ES starting the day a little bit red. We kind of hit that prior high. So ES actually making a higher high. Then we had higher all-time high. S&P 500 lagging behind just a little bit. Just a little bit. Good grief, man. Mora, 52-week high. I'm getting alerts like freaking crazy. I guess crypto's rallying. That's why it's all down here in the list today. So NQ broke out, higher high. For those of you that were listening to me this time last year, I was calling for a super squeeze. While time is the hardest thing to predict on this whole thing, I was thinking we might get there by the summer. We kind of ran out of steam there in July. Went through a 3-month correction into October, and now we're finally getting there. New all-time highs on Nasdaq and and ES poking up there yesterday. It wasn't on the S&P 500 actual cash index yet. We could spike it here in the next 7 days. So I was kind of right. I mean, I get lucky sometimes. Sometimes I get lucky. So Russell is still way lagging though. We went from a 52-week low to a 52-week high in about 48 days, but all-time high is still a long way off. Long way off. And this all looks corrective. Right here. That all looks pretty corrective. So is this just a B wave and then we actually get a C wave on down? That might be. So we've got significant resistance right up here in the zone between, say, 2100 and 2300. Kind of topped out right there on the way down. If we pop up in there, we'll see what happens. But that's a strong move up, and it hasn't retraced yet. Highly cautious. All these things are kind of coming together here. The S5FI being cranked up, the fear and greed index being cranked up, the absolute straight freaking up rips that we saw in Nasdaq, Russell, S&P, and what does the market love to do when everybody tips the boat the same way? Loves to take everybody's money. So just wait for it. Sucking everybody in. Everybody's going to get complacent, and then the market's going to rip everybody. It's going to happen. You can doubt me all you want. It's going to happen. So this is positive right here on oil. Oil may call the Fed's bluff. I've been talking about this for a few days. Oil may be the wrench in the works. Goose and I were doing some analysis looking at oil versus gold. With the current gold prices and the historical average ratio between them, gold historically, looking back as far as we could pull data, about 19 to 20x. Gold hangs out about 19 to 20 times the price of oil historically. Now, it does vary up and down, and when oil went negative, it creates a craziness in the chart. But when you look at it, you go ahead, it's easy to do in TradingView. GC1 exclamation point divided by CL1 exclamation point, right like this. Then you pop up to a weekly chart. And you'd be like, what? You zoom this on out, and hanging out right about here is the middle, right in 20. Right about here. You can see about half the price action below it, half of it above it. This got a little crazy. Spiked up, spiked down. We're hanging up here at 27. Now, how do we get back down to around 20? The price of oil pops to 100, while gold hangs out at 2,000. That gets us back to a ratio of 20. If gold starts running, that could support oil going way on higher. Now, this is a chart that seems to be relatively flat in the long term. Kind of like S5FI. It just looks more like an oscillator, less like a trend. I don't think we're going to go on some epic trend. So as the price of gold goes higher, the price of oil is probably going to go higher, or vice versa. Black gold. All right, it's kind of interesting when you look at it that way. I apparently left my monster can in the other room. All right. So right now, what could happen with the price of oil? Well, gold is suggesting that we may see a fast $25 appreciation back into $100 oil. Now look, it just happens to be the 1272 level right up in here. Right around that $100 area. GC banging its head right on that resistance. It may hang out here until oil can catch up. Of course, it may start running, and then oil's going to probably go along with it. Difference between the shiny gold and the black gold. It's kind of interesting, right? Bitcoin, look at this. Starting to break above the price action we've had for the last 6 days or so. We get above that high. I mean, I'm seeing some wild predictions. Absolute wild predictions. Some big name banks, big name mainstream media is calling for like 7-figure prices on Bitcoin after this ETF approval. I've been talking about it the last couple of days. We have about 3 weeks left. We got next week, the week after, and then the 10th is right after that. The 10th is the final deadline for ARK's Bitcoin Spot ETF, and then the 15th is BlackRock's Bitcoin Spot ETF. They're likely to approve several of these altogether. I think there's 9 applications in altogether, and it's going to suck up some supply in Bitcoin. Could we see a crazy spike? Yeah. Should you be prepared to potentially book some profits if we do that? Yeah, you should. Be very prudent and smart. Now, Ethereum, not looking nearly as bullish. It is holding on to this uptrend of lows. Held on to it barely. But we still got a downtrend of highs right here, off of that high. So we're kind of in a little wedge. Do we break out? Do we break down? It's kind of the big question. We're still below significant resistance, and we could see this drop out while Bitcoin goes on a crazy run. There's some huge fundamental differences between Ethereum and Bitcoin. Dollar. It's really testing that trend line. Sitting there. This indicates to me that starting to tip the odds a little bit that we may see this drop out, poke below these lows here, and come on down to the mid-90s. So watch out. Watch out, watch out. MSTR. Getting a nice pop this morning on Bitcoin Strength. They hold one of the largest holdings of Bitcoin, along with Hood. And you can see Hood's being crazy too. Popping up, retracing. It's got a long way to go to get back to where it was, though. You know, Hood made an epic fall from grace over here. That did a breakout, did a retest. Could be on a new trend. We'll see. IPOs aren't bullish. They're bearish, and that's what we had, the lowest low. That could be the bottom for Robinhood, and it could take off from here. TTC, Toro, a nice pop, and gap down and gap right back up. Interesting. But a red candle indicates it's probably going to come back down to the roadmap line. Still very much a sideways, non-committal pattern there. Hadn't really been going anywhere. Just hanging out in this range. Not sure that that's anything I want to get involved in. I mean, it's a fair range, but I'd rather get onto something that was actually going to move. Natural gas. Yeah, man. 1 million 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 popping up, but turning red. If we break down below this here, we're coming back to the lows. I've been saying that for months and months, that we're likely to go tag the low again right around $2. As long as we're below the downtrend, we're below, I mean, the bottom half of that support resistance line, support resistant area, I should say. We can easily flush right down there. Now a tag, you know, one quick spike down there. If we just did that in one day, that could be all it needs, and then it could turn bullish. But looks like to me that probably gonna flush down there. I mean, you can see it flushed pretty quickly. After trying to break out, failed, flushed pretty quickly back down in here. We could see that flush on down to $2. We've got a glut of supply. We're drilling like crazy. And supply and demand. It became uninteresting. We thought we were going to get crazy prices on natural gas and then crushed everybody's hopes and dreams. EXAS. God, what a gnarly chart. Look at that. Why would you want to get involved in that? It's in a recent downtrend, lower high, starting to kind of look like potential for a head and shoulders thing. Right there. Don't see it. I mean, look, it's almost like right there. Shoulder, head, shoulder. What is that? If it completed that, it could result in a move down. Now, could it do something different? Sure, it can do something different, but that looks like sideways, choppy garbage. Don't really want to get involved in something that's just, I mean, look for right there. So 19, 20, 21, 22, 23, 24, 6 years been going sideways, or 5 years. I don't want to get involved in something like that. Coin, man, oh man, reaching right up to that extension 172. We may see this thing rip right on up higher. We may. I got off the boat. Google, man, look at that. Goose, did you get on that? Talk about a turn and burn right there. 143, 147, and then that resistance up there from these prior highs over here. Beautiful. Good job, my man. Good job. BitX. You want to play with fire? Here you go. Volatility shares. 2x Bitcoin strategy based on futures. You want to amp up your Bitcoin gains. Playing with fire right here. This cuts both ways. Leverage is dangerous. Don't suggest it. You want to really leverage it up though. Play options on this, and it's like soaking yourself in gasoline. But if we were to pop to 7 figures, this thing's probably going to go like thermonuclear higher. It'll be redonkulous. So be careful playing with that one. I'm on this one. Looking for a breakout up here at about, I might jump off at 12. I was talking about this last night. We did a measured bounce. I mean, 14 would be reasonable. Could go to 16. Made a few grand on it already. Bye, Kimberly. Now we can talk about what I got her for Christmas. Anyway, Mara, look at that baby go. Coming up into resistance here, 24. Have more resistance up here at 27. And it depends on which chart of mine you look at to what the levels are. There's resistance here, and of course we're turning red a little bit. There's going to be resistance up here. The head and shoulders pattern that we did all of 22 kind of completes up here around 32. And if we get just crazy, like if Bitcoin just goes straight effing nuts, we're going to see something like that. Maybe like, no way. Well, the chart suggests it's sitting there. And when you look at the weekly, it has a nested pattern on here for going higher. It's in the charts. So we did a big 1, 2, 618 retrace. 3 puts it way on up here. Crazy high potential. Just be careful out there. POL. Well, that looks like a flaming pile of garbage. Reverse split is not bullish. Talking like, why do you want to trade that? Oh my goodness. That's a dumpster fire and a half right there. Fire. All right. And cut my head off. TMF. Looks like we may pop up here and retrace. This is a 3x leverage. Be careful. Leverage cuts both ways. Be careful. ARGX. Looks like it's breaking below the roadmap line. We may see a deeper retrace. We could fill the gap all the way back down. Pharmaceutical, biotech, medtech. You know, be careful on that one. These things, FDA. Oh, it did fill the gap all the way back down. There it is. Didn't even see it down there. So far down, I thought it was a volume candle. See that right there? Shoo. Gotta love it. Gotta love it. That was telling you that something was up. And then, sure enough. Sure enough. Sure enough. All right. FTX also took a bath. Did the Walmart pattern. I say the Walmart pattern. It's just the market roadmap pattern. We bounced off the roadmap line right up to the 1272. And surprise. Right down to the roadmap line. What happens next? Last night I was speculating we could see it do like Walmart. Retrace a little deeper. Find support. But the roadmap line could be support. And we go higher from here. If you don't recall Walmart, maybe you're new here. Maybe you didn't see this. Look, a few weeks back in October, it was my chart of the week. And we popped up, hit the target. Earnings happened. Ouch. Right down there. We've kind of drifted off lower, made a lower low. And coming back up into the roadmap line here. If Walmart can get above here, where we topped out those 2 candles, then we can start working on filling that gap back up into that area and working on something bigger potentially. Go from that high down to this low. And the upside targets could be like 175, 182 even. That's why I take the conservative targets most of the time, that 1272, because of stuff like this. Ouch. Slam right down. That's the power of the roadmap line pattern right there. We're in an uptrend. You see how the roadmap line in an uptrend, we come down, we retest it, we hold it, and retest it a couple times. That was one hit, kind of dipped below, came up, found a support there again, and then we took off. Broke up through the 1618. That made it 70% likely we were going to the 282 level, right up in there. We got there. You had 1, 2, 3, 4 days to get out. Earnings happened, and all the way back down to the roadmap line. Beautiful. The pattern works. I mean, I think that was on the market roadmap list back a couple weeks ago. In fact, we could go check, I guess. Let's see. Should have been there. Let's see. Maybe on November 5th. Oh, right there it is. See? It's on the list. Stay on there in the next week. Go look for the list. Yep, it was on there the next week. So you had a couple weeks to watch that one when it broke above here. Nice opportunity. Did I trade it? No, I didn't trade that one. Did not trade that one. Had my interests in other places. All right. UPS. Moving down in sympathy. This one looks a lot more bearish, though. Watch out. Watch out, watch out. That looks like the roadmap line upside down. UPS could definitely get an extension lower. Watch out. We get below that 618 level. It's just the same as going up. Break below that, it's like 70% likely we see something like that down into that zone. Now, if we break above, we can start changing the tune, the story on UPS. But right now, that's the roadmap line saying downtrend. And the pattern would be down. IMVT. Yeah, biotech, garbage. Biotech. Toyota Motors. Hadn't been able to pop that zone up there. Probably coming back down to the roadmap line. Probably going to meet up here sometime in the next month or two. CRM. Being a super beast right up to the 1618. I've drawn that on there a couple times, apparently. We popped just right up, got it to the 1618. That's only like a 40% likely target. Going on up higher, it drops off exponentially as we go higher and higher. This is like less than 1% likely to just pop to 500. So without a significant retrace. And significant, I'm talking about like back to the roadmap line. You know, sometimes they do it, but most of the time, not. You know, they're ones that just pop are the exception, like this one. Look at this thing rocking and rolling. Look how many, you know, up there at the 2618. Could it go on up to the 3618? The 4236? Yeah, sure could. 686 way on up there. So this one could, but the higher it climbs, the more likely it is to get a big, fast, deep retrace back down to the roadmap line. Roadmap line. WGO. This is sideways, choppy, overlapping. Look, the high, the low, the high, the low, everything overlaps. It's not trending. The roadmap line is almost flat. You know, kind of, sort of tipping up, but when your highs and your lows are all overlapping, there's nothing clear. There's no clear trend here. I would probably avoid this. Plus, think about it macro, economically wise. Winnebagos, they're expensive. You got to borrow money to buy one, usually. A lot of people, you know, normal people, got to borrow money. Money to borrowing is expensive right now. Right? So, what does that mean? It means probably it's tough to sell expensive stuff when people are having a hard time buying because interest. Their cogs are out of unreal. Look at that. So, make a little bit of profit. Lows getting slammed a little bit. Not a lot of it, just a little bit. That's coming up into the targets, and that's a lower high. Be careful, I would say. Can it break out above this? Sure. And then we could look for higher targets. But right now, this is kind of a, you see, this was that overlappy, highs and lows overlapping. We popped up, got a big down. Kind of overlapping that price action up there, though. So, I don't know. It has become unclear what we're doing. We got up to this zone right where my arrow was. So what next? Unclear at this point. That's what I can offer you, is that it's unclear. Might we go down? We might. Might we break out and go to 287? We might. This is overlapping and choppy and not bullish. GIS, well, hanging out down here. Can it push on down? Yep. Touches the roadmap line, we'd reset the projections. It may very well touch the roadmap line around 69, 70 area. And then we'd have like a 58, 55 downside if it just turned down, broke back below the 618. Same pattern to the downside. VSTE. Garbage. Absolute garbage. Don't trade this. BHVN. Pharmaceutical medtech. Probably come back to the roadmap line at some point down here. Sometime out in the future here. Probably coming back. Kind of gapped down and found it really quickly back here. So watch out. Do it again. DOCU. Get a pullback. That may have been all she could do on this run here. Got up these prior highs. And we may see a retrace. It's still a downtrend. Starting to arc the bottom. Probably get a retrace. If we can hold it, go higher. That was off the lowest low. So be careful. Significant resistance in that area. Right there. LIBU. Bullish biotech. And that's been in a giant downtrend. And it's leveraged. So it's like leveraged biotech. I mean, I could click all the buttons. And it's a dumpster fire going down. So be careful. Playing with that one, you can get burned really badly. GH. And medtech, nursing. So healthcare has gotten murderized in 2023. And energy's kind of got murderized in the back half of 2023. So those could be some emerging leaders as we move into 2024. I definitely kind of keep my eye on it. And we've got stuff like CI, UNH, all kind of making some. And that one failed to do the breakout. Got a significant retrace. Looks like it's coming back to the roadmap line here. CI, not really holding on to that move up. Kind of makes you. That was a nice big gap up, but stopped right where the resistance was. And Humana is hanging out down here. So we're seeing a lot of healthcare kind of lagging, just sideways, choppy, underperforming in 2023, while a lot of other things are going higher. So watch for this to start turning. I may, this may be maybe some of the stuff we talk about next year. So I'm definitely kind of keeping an eye on it. And then energy stuff like XLE. Okay, my energy sector. You can see how this has been lackluster. You got XOP. Also been kind of lackluster. Despite the fact we're drilling a whole bunch. We're getting oversupply on natural gas, but oil may ramp out and we could see a breakout and a big move up as we head into 2024. So these are kind of some of the things I'm keeping an eye on as we head into the new year. They've been underperforming, kind of left for dead by some of the big funds and stuff like that. And money moves, all right? We're going to move out of some of the stuff that performed well in 23, move into some of the stuff that potentially is going to perform. And like some of the healthcare stuff, LLY. I mean, look at that. That's been rocking. They're going to put them and NVO are scheduled for massive CapEx investment. As capital expenditures, they have record CapEx investments into producing more GLP-1 drugs. So they're highly likely to be going higher. And airlines look like crap. Let's be honest. Absolute crap, like Delta. Trying to remember United, UAL. Where is it? UAL. There we go. This looks like crap. Like it's not just underperforming. It looks like crap. And nope, that's Southwest. Southwest. SWA. No, I can't remember Southwest Airlines. Shoot. Love. That's it. Duh. Go with a ticker that didn't make sense. I mean, look, it's isn't just like the theme of 23. This is like so. I don't see them outperforming. Well, we've had a look at the history of airlines. You know, where's Pan Am? Gone. Where's all these other ones that used to be around? Gone. The airline's just a churn. You want to play something more, you know, constructive, but that one's likely to get a pullback after that giant move up there. I mean, look how straight up that was. That's, you know, so be careful. Be careful. Anyway. All right. Bias for the day. I mean, kind of expect S&P 500 to spike a new all-time high here in the next 7 days. We've come so far, so close. Why wouldn't it do it? And we may come up just a little shy, but grinding right up in there, getting that all-time high. We've only got, what, 768, like 30, 40, 50 points left. It's not much. And 50, 52, 53 points put us to a new all-time high. 50, well, take 2 off. And fit right at 50 points. Can we do it? Probably. Wouldn't surprise me one bit to see a new all-time high here before the end of the year. 7 days left. We'll see what happens. All right. I'll be back with you again tomorrow. Hope you have a good trading day. Hope you stay safe out there. The account you save may be your own. Remember, it's not staying wrong that costs you money. I mean, well, it is staying wrong. It's not being wrong that costs you the money. It's staying wrong that costs you the money. And make sure you like. If I said anything you like, subscribe. Hit the button down below. And if you want to join me in Discord, link is in the description. Just hit the more button. Scroll down just a little bit. $5. Come join me in Discord. See you guys later.